Hi guys, I'm going to talk to you a little about Turnip Capital, a stock investment firm which I started about last year. Okay, all right, so a little bit about the things I'm going to go over. I'm going to talk about uh, myself. I'm going to talk about what the stock market is, basic terms you should know, guidelines to making money, buying and selling equities, um, option contracts, high risk, high reward, um, losing trades. And then I'm going to talk about an intro to Turnip Capital, the credentials that we have, the platform we use, a couple of recent big winners that we've had, how to get started, an affiliate, and a summary. All right, so a little bit about myself. My name is Gus Smith. I was born in Everett, Massachusetts, which is right north of Boston. All right, I'm the founder and CEO of Turnip Capital. I'm a political science major from University of Rhode Island. And, a couple of my hobbies. Uh, Pretty much all I do is I just do the stock market. Um, I like working on my fitness and traveling. All right, so what is a stock market? All right, the stock market is an entity where shares of public companies are traded. All right, markets are designed to go up or increase in value. You make an investment. A couple of years later, hopefully that investment has grown. All right. As of 2013, the value of all global markets is over $50 trillion, which is a ton of money. All right, and this photo that you see, this is the S&P 500. It's just a yearly chart. You can see how much it's increased within the past 40 years or so. Actually, it just hit new highs yesterday at 1632. All right, moving on. All right, so basic market terms. All right, a stock index, basically it's a group of stocks or companies just used to represent the investor sentiment of within a particular nation. So in the United States, the S&P 500, one of the most popular ones. Right, it's the average value of the 500 biggest publicly traded companies. The Dow Jones, it's the average of 30 large industrial stocks. All right, the Nasdaq is the tech index. It includes Apple, Microsoft, Facebook, and so and so. All right, so equities, securities, those just mean individual stocks. Bullish means if you're bullish on something, you want the stock to go up. All right, bearish is you want the stock to go down. And these terms are used. Bullish, as a bull, when they attack, they use their horns and they attack upwards. In a bear, they use their claws and they swipe down. So that's where those terms came from. Long position. A long position means you want the stock to go up. Pretty much, you have a long position. You bought something or you bought calls in a stock. All right. A short position. You want the stock to go down. You short sold something, or you buy a put option, which means you can buy and sell, or you can sell and then buy back. So a short position is you sell something expensive and then you buy it back at a cheaper price. All right, a stock option, I'm going to go over this a little bit later. All right, there's two types, calls and puts. There's an intrinsic value to them as well as a time value. All right, if you buy a call option, you want the stock to go up. And if you buy a put option, you want the stock to go down. So basically, with a call option, you call something at that certain price for a certain amount of time. In a put option, you put something away at that price. So if it's trading very high, $50, you put it away at $50, and then when it goes a little bit lower, 40, you return the contract. And a contract is the right to buy 100 shares. All right, so here a couple guidelines to making money. It's all about risk management. You don't want to fight the trend. You want to use stock options to lock in profits and limit your losses. All right. Untitled Capital, we specialize in options trading. I liken it to like using a sniper rifle to and speculation. It's all about. It's like zeroing in on something and just whatever you think you can use it with options. You can do whatever you need to do. All right. So the goal of any stock market risk management process is to avoid losing money. All right. Options trading allows risk managers to speculate on the future direction of an equities price with 100% risk. It's extremely risky trading. If the trade moves against you, you are likely to lose your entire investment. That being said, you can also make huge profits. All right, so just an example, just buying and selling equities. All right, so if you buy 1,000 shares, a little bit lower at 33 in December, cash out a couple months later in April at $45 per share, make a profit of $12,000. All right, on the right hand of the screen, you can short sell something. Instead of buying and selling, you can sell and then buy back. So you can go both ways in the market pretty much. So you can short sell something when it's high on the right side, see at $38 per share, all right? And then you can buy back at $18 per share and you make a profit of $20,000. Options contracts. So you buy something at a certain strike price for a certain amount per contract. For whatever month it expires. It usually expires the third week on a Friday. So time is against you. It's used against you, and you don't own it. You just have the right to own it until a certain time. Right? Buying calls. If you buy a call, for example, $23. If you buy the right to buy it at 23 for 15 cents a share, and it goes up to $24, the stock, the intrinsic value will be $1 plus the time value that's left on it. So if, by the time it expires, if it's at $24, that option will be worth $1 from your investment from 15 cents, which is a 85-cent profit, which is when you're buying it at 15 cents and selling at 85, that's a tremendous amount of profit. All right, so options trading is pretty much the riskiest type of trading there is. All trades are 100% risk. You can lose your entire investment if the stock moves against your position. Now, usually one big winning trade can pay for many losing trades. You just got to let your winners run. You got to cut your losses short. All right, so here's a couple examples of some big losers I've had. I'm just showing this as an example of how risky options trading is. You can lose your entire investment. Just keep that in mind. All right, so a little bit of an introduction about Turnip Capital. It was formed around June 2012 with the help of myself, my family, and some friends. I'm extremely passionate about the market. I look at it every single day. It's like a video game to me at this point, and I love what I do. All right, so here's some credentials. In 2012, the firm has traded over $500,000 worth of real money, as you can see on the left. And, actually, on the right side, the CEO of Charles Schwab actually sent me a letter for being one of the highest performing accounts in August 2012. I had a great month in August, and he just wanted to recognize me for being a very high performer in that month. All right, moving on. So I use this type of platform. It's called FinViz. Has everything you need during the market. You can view what stocks went up the most, what stocks went down the most, stocks that hit new highs, stocks that hit new lows, unusual volume, which means stocks that are trading much higher than their usually daily average. On the right side, you get your heat map. The green means it's been going up. The red means it's going down. Right. I've been using this for about a year, and it's very helpful. So here's one of my biggest gains this year in 2013. You can see in the top, it's a chart of GNC. If you look at 2013, just right in the middle of the chart at the bottom, you see that red bar with the tail at the bottom of it. Actually, that day, I bought stock options in that stock. As you can see on the bottom left, January 3rd, about 80 contracts at 10 cents. I remember this day. It was a good day in the market. Everything was pretty much going up, but I remember this stock, something was going on with it. It was going down. It was very unusual to me because I watch a bunch of stocks. So I mean, I thought it was very cheap. So I put an order in, and I ended up getting it, and I'm very happy about that. And then you can see the next day, January 4th, I sold 20 contracts. A quarter of my position for 60 cents, which is 500% gain. Already up $300, and I'm still holding on to 60 contracts. And then you can see on the right, those 60 contracts ended up increasing a tremendous amount. Went all the way up to, $10,000 total. So it was one of my biggest winners this year. I'm very happy about it. All right, here's a couple more big winners. You can see, it's nice making money. In the middle, everything was green. Everything's green. The goal is to be green, and just stay away from red. You don't want anything red. All right, so get started and turn up capital. You just plan your future, improve your lifestyle. Maybe one day own a fraction of the firm. It only costs $2,000 to join the team. We only take 20% of gains. The industry average is usually 50%. But since we just started last year, we're only doing 20% fees for whatever gains that we have. So it could definitely change your life. Get your financial freedom. All right. Turn Up Capital, we're affiliated with the Black Bar Group, and specifically Black Bar Capital. All right. That's the founder of Black Bar Capital on the left, and that's me on the right. All right, here's the video advertisement. And a quick summary. Turn Up Capital, we're here to help you with your financial goals. We have extensive knowledge of the markets and know what it takes to make money, obviously. And we hope you join the team and turn up with us. Hope you enjoyed the presentation. And we're here to help you. We're here to help you achieve your financial goals. It's been a great time.